All right, welcome back to the channel. It is Saturday, January 28th, just before 1 p.m. Central Time right now. But I use Eastern Time on my charts. I believe I've mentioned that in previous videos. So you do see down here in military time, it's about 1:40 p.m. Eastern Time. Just going to do a quick disclaimer again, of course, this is not financial advice. This is purely educational and entertainment. I want to just be speaking about the way that I view these markets based on the things that I've learned and my experiences. So today I'll actually be going over a quick review of Dow as well as the S&P. I actually did not take any trades in the Dow this week. The only trade that I took was within S&P, and we'll get into why and all of that and stuff like that. But just looking at the monthly really quick, and we'll do Dow, then we'll jump over to S&P. Just want to keep in mind that with 3 days left in January, we're still trading within December's range. So most likely we'll close as an inside bar, basically meaning that this month traded within the range of the month beforehand, right? And so now going down to the weekly chart, remembering this Fibonacci that I pointed out from the body of right? What is down close candle, but it's the highest open or close, and then the lowest open or close of this up close candle down here on the weekly, using that as the range for this fib retracement tool. And what you see here is again, we had those 2 weeks where it traded up to that 79% and we got rejection. So I mean, well, right, this rejection started, and then we had this week come up, close down here. Then we tapped the 50%, consolidated, pushed out that consolidation, had a nice bearish close week. But then this previous week, well, this past week, you can see again on this, we have an inside bar, basically meaning that this week traded within a range of the week beforehand. And so this right here is just something that honestly, I'm still a student of the game. I'm still accumulating knowledge on a daily basis and working through different methodologies to come up with a set in stone model for myself to use and something to potentially, I guess, give me the confidence to maybe start live trading, which is something that could be in the plans for later on this year, or maybe something that I'll, think about going into 2024 just to kind of, add some value to some folks and really just, show what I can do. But this idea here is just with there not being any imbalances here to reference as price was kind of within this consolidation, we see we have imbalances down here that it possibly could have traded down to, right? But as far as on the upside with this price structure over here on a smaller time frame, of course, there are going to be some imbalances and things like that that we could be reaching for, and we'll look at that as well. But utilizing this wick here, which is not the bulk of the volume, because the bodies of the candles are going to be the bulk of the volume. So essentially, you can look at this wick as an imbalance within itself. And so measuring out the midpoint of that, and dragging that out of time, we see 34,479. We actually spoke about this in the last video, how we tapped into that and then we traded lower. So that's just me explaining the levels that you see here on the weekly chart. Going down to the daily. Now, again, incorporating these volume imbalances that I spoke of, basically when one day opens up not at the same closing price that the prior day did, you're going to get something called a volume imbalance, meaning that there is no volume in that small gap there, right? And so I like to mark these out and extend them in time and watch how price basically is like it navigates to these levels. It works these levels, right? They're like magnets for price. And so on my daily chart, I tend to have these marked up, the ones that are kind of closer to where we are right now, relatively as far as price is concerned. And so we do see that this was the first day of trading this past week. So we got Monday, Tuesday, Wednesday, Thursday, Friday trading, right? So we see Monday and Tuesday, bullish candles. Wednesday, we had a nice drop. Where's it dropped down to on the daily, at least, right? We trade down into this volume imbalance, but also you can look at this down close candle as support. Trade into that, snap back like crazy. I mean, this is Well, actually, I can just look at it. So remember, we're looking at the upper left right here, right? When we're looking at the open, high, low, close of these candles. So by the L, that low is 33347. And it closed when the down closed candle was going to close on the low end. So the low was 33347. The close was 33823. So that's about 500 points right there, right? Of basically could have been seen as a retracement, but at that point, I mean, you're looking at reversal, just considering all of the other factors in play here. And this is just, again, from my own experience to document my growth and my progress because I was not looking for this to be an area of support. Although now that I'm speaking about it now, it's clear as day that I should have been at least potentially given this area a chance to be support to then see prices, right, trade back up to minimum this volume imbalance, which was beautiful. We got that delivery on Thursday. And then ultimately on Friday, we pushed a little bit higher through this volume imbalance, right? Trading up closer to that level, one of those levels on that fib retracement from the weekly that I have drawn out. And so just beautiful price delivery. Although it was very volatile, beautiful price delivery. And so going down to the hourly chart, and we're actually, well, let me explain these two levels up here real quick. Same thing, the same concept. Wicks being seen as imbalances because on this daily chart as well, you see we don't have many imbalances up here. We got this one here, and so I'll actually put that here so we can see. All right, so we see up in here, we have this imbalance, price traded, rejected, right, was ultimately consolidating underneath it. And then we finally got to push above the midpoint of it, pushed all the way through to the top, but then rejected quickly, and then another rally through, right? And then basically at this point, we've balanced that range out, right? Traded lower into this consolidation, could not take out even this swing low in here. And then that's again, we see this nice rally up to the upside. But so that's all these levels are. I put them in dark blue to kind of keep it color coordinated. Dark blue kind of like for daily, right? So it's daily levels here as far as just those midpoints to those wicks, aka imbalances, right? But I don't need this level here right now, so I'm gonna get rid of that. And then what I was about to say, just going down to the hourly, this will be the lowest time frame I'm gonna go through today for this video, just because the 15-minute, and I'll show you real quick actually, just to, right, for the sake of it gets a little bit choppy, right? The 15 got a little bit choppy, so we're gonna keep it just looking at the hourly chart, and then we'll bounce over to S&P. We'll do a little quick like review, recap, and then we'll go into what I'm looking to see next week possibly. But so from the hourly perspective, so you see my daily dividers, right? Sunday when it opens, Monday, Tuesday, Wednesday, Thursday, Friday. Yellow line is going to be the opening price for the week, right? So Sunday, ultimately, we just got a little consolidation, but consolidates under the opening price, right? Monday, we get back above the opening price, but we're kind of working it a little bit, essentially. Nice little rally, consolidation, one more rally, right? We see a nice little drop, taking out both of these lows, so making a new low of the week essentially on Wednesday before we saw an aggressive rally, not taking out these highs, basically consolidating, flirting with them, right? Push above them here. Still, though, in my mind, a lot of consolidation, right? Um, and again, consolidation, right? And so this is why, if you heard me a few minutes ago, why I was not interested in Dow, because there was a lot of this consolidation in my opinion, you know, especially on the hourly chart. Like the 15-minute was very choppy. Hourly over here is pretty much in the consolidation in my opinion. Although if you really look at it, from where the week opened at 33,471 up to 34, you know, 200, right? We're talking about 800 points there, right? But that's how this market moves. It's a monster. And so although you will see the numbers, you know, changing as far as price is concerned, that doesn't always mean it's high probability. So I'll tend to have more days where I stay away rather than force myself to engage until I come up with a model of my own that I trust and have confidence in to scalp on a daily basis, looking for, you know, a certain amount of points based on certain things happening in the marketplace, right? But so we'll shoot back up to, well, actually, yeah, because we'll come back to those levels that you see when we go into what I'm looking for going into next week. So now looking at the S&P, same thing, right? just keeping in mind January with 3 days left, we are inside December's trading range still. From a monthly perspective, from the weekly, this was that same concept, right? So we left this one white for weekly, but this is just basically that midpoint of this weekly wick, aka imbalance. So we see we delivered to that this weekly beautifully. Actually got a close above it. Going down to the daily chart here. So this area right here, I believe I mentioned in the last video, especially considering that this was the first time we had a daily body that closed outside of it, and actually no daily bodies closed back within it. So this was an area of potential resistance on the daily chart. But although we got a rejection here, and then you see as it's coming in, we keep on getting these rejections, basically finally get one, and this was one trade I was a part of here. Actually got in on Tuesday's close and was able to be a participant here. I believe I was done by the time I got into this little area here, which for me could have been a problem area. It wasn't. We did trade lower, in fact. And then again, we saw on Friday a nice little rally. But you see the difference in price action here than on US 30, just strictly looking at the daily chart. So let me go back to US 30 real quick. So you see it was way more aggressive as far as last week was concerned. But then coming into this week, so this started this week, look at how these 3 days, although they were all basically offered a lot of movement, it was a lot of back and forth, right? And that's what I mean by that choppiness, that there was a lot of back and forth within these days. But then you go into the S&P and you look at how we had this day was bullish. We had an inside day. And like I said, me catching the sale here, I was able to capitalize as soon as this day opened on the drop down. And I was just making sure to secure profit because understanding that this down close candle had potential to be a support level, as well as this little imbalance here, right? As well as the fact that this old resistance area was not very strong as far as rejecting price and making a new lower low. It couldn't even take out this swing low. So the chances were that it would probably find some sort of support in here and reject, which it did. But again, I was not part of any of these rallies up into these areas up here. And so what you'll see, just I'm going to scroll out a little bit, talk about these volume imbalances, of course. And so what did we trade to on Monday? Volume imbalance, reject, right? Trade down into this imbalance here, snap back above this old resistance level, which is this blue shaded area. The reason it's blue now, obviously, is because in my mind, if it was resistance, and it was a supposed potential strong area resistance, then vice versa, I'm expecting to be a strong area support, right? So then we see we get the closes, close above, close above, close above, close above, right? We finally push through this volume imbalance. We trade through that weekly wick, right? That midpoint, which I was talking about. Actually, on Thursday was the first time. And then Friday, we opened up down here, but we were able to trade up into these other volume imbalances, right? On Friday before rejecting and closing down here. And so again, this daily right here, just midpoint of this wick, aka imbalance. And going on to the hourly chart. So just again, want to let you see, right? Daily dividers, starting Sunday, pretty much the same thing, right? We trade underneath, kind of consolidate within it. Well, on that weekly opening price, then we get a nice rally, hit that first volume imbalance, right? Then we're basically just creating, in a sense, a lot of sell side, if you ask me. But on Tuesday, so when the market closes, it's actually this candle right here where it closed. So it was an up close candle that closed, and this is where I got into my entry for the sell. And then the very next, trading session when it opens, so technically this candle right here starts, at least on one of the platforms I trade on, MetaTrader, this starts Wednesday. Even though it's still in Tuesday, technically this starts what they consider Wednesday, with the way that they calculate time on there. But immediately we drop, get a consolidation going into Wednesday in my mind officially, right? The London session. And then we see that continuation going into New York. And then that's when we find support and we start to rally back up. Ultimately, this being a target, but again, I was not participating in any of this. I was just watching, observing, taking notes, studying. We do see price get above that on Thursday a few times, stab above it, retrace, and then run up again. This is again when we first tapped that midpoint of that weekly wick. right? And then we close right on this hour here, new hour or the Friday trading session open up here. A lot of consolidation, right? And then we get into that New York Open, and I believe we had some news, and we get this nice little aggressive push up into these volume imbalances before trading lower to close the week. So I do want to pull up the economic calendar because I didn't to start, but just a little quick look back, right? So Sunday, no news on the US dollar of high impact. We had some news here, but no orange or red folders, right? On Monday. Tuesday, we had some GBP, Euro, right? High impact stuff, but we had US dollar around 9:45 Eastern, going into 10 Eastern. We had some USD news, so that was Tuesday. And then Wednesday, nothing higher medium impact on the dollar. Thursday, we did have GDP news at 8:30. Then we had new home sales at 10 Eastern. And then Friday, this core PCE price index at 8:30, and then pending home sales and the consumer sentiment at 10 o'clock. All right. And so going back to charts, just being able to see. So Tuesday there was news, all right. You see that Tuesday was ultimately though really just consolidation before opening up for Wednesday's trading and then collapsing. There was nothing on Wednesday. Thursday we had some news. Again, you see a lot of choppiness here. So news not really providing a catalyst for any like long-term like swings, if you will, unless you look at this as one, considering that right, we had this aggressive push up at the open, traded lower, created this swing low after we took out, the Asian lows over here, and then we rallied above that, right? Consolidation, and then one more rally. But to be honest, when I go into what I'm looking for next week, I'm not really looking at this as an important low, to be honest, like it's protected or anything like that. And then on Friday again there was news. So we see we were very aggressive, right? Looked like we were maybe going to turn around and trade lower back into the weekly range, but they had other plans. Closed the week out relatively bullish, but of course, right, within those last 2 hours of trading, a nice little retracement and back into the daily range, if you will. And so that's just the review basically. Now I'm going into believe the daily will probably be the best for the outlook for next week. So with the leading indicator here for me is going to be the S&P, right? And so let me actually start there. So again, like I said, the blue shaded box, I'm looking for this to be a potential area of support. And actually, let me go back to the calendar real quick. I want to pull up this next upcoming week, right? So that we're clear about that. What's potentially on the horizon as far as economic calendar events that could be high impact. So I know that next week we do have non-farm payroll. So nothing on Monday. Tuesday we do have Chicago PMI. I don't even know what this is, so let's find out. CB consumer confidence. So conference board consumer confidence. Okay. And so we got some high impact news around 9:45, 10 o'clock on Tuesday. Wednesday, we have that non-farm employment change at 8:15, as well as job openings and ISM manufacturing PMI at 10, and then FOMC going to be on Wednesday, and this is going to be February 1st as well, so the beginning of a new month. A lot of potential for volatility, so definitely looking forward to seeing what the market offers as far as price fluctuations. Thursday, GBP high impact heavy at 7, Euro at 8:15 heavy. Then we get a USD unemployment claims at 8:30. Another red Euro folder. All right. Friday, NFP non-farm employment change. So at 8:30 we'll get that release, and then at 10 on Friday we get ISM services PMI. So definitely high impact news on the horizon. Just going back to the charts. And what does that mean, right? So this is what I'm looking for next week. I'm very bullish. I'll say still right now, short term, just considering, I mean, price action is bullish. Why trade against the trend, especially after you get a day like this where we traded inside of what I'm considering an accumulation area for, buys. We traded down to an imbalance in here, and we saw a nice reaction off of that, which then we carried through and tapped into other higher price levels, right? And so the reason that you see this white line and these three green lines, this is actually a Fibonacci that I've applied to the daily chart using basically the weekly range that we just created. So from this low, which was created on Wednesday, the low of the week was created Wednesday, and then Friday creating a high, measuring out that range, right? And looking for areas where I may be trying to look for a buy entry to possibly take price at least minimum up to this blue line, which is again the halfway point of this wick, which is 41.17 and 3/4. So right now we're at 40.84 and a quarter. So going down to the hourly, all right. So now with that perspective in mind, with you understanding what these lines are inside of this overall blue shaded area, right? What I'm going to be looking for is for price to potentially find its way underneath this white line, because what I see here is definitely like a smooth, like relatively equal lows, if you will. No reason for this to be left open unless the market opens up with a gap and then finds support right at, let's say, inside these volume imbalances or even above this area at some point to just continue pushing higher. But what I would like to see ideally is the market to show a willingness to trade back down into what would be considered a discount below this 50%. What I like to see is that there are imbalances in here, right, around these areas. So it would be beautiful to see if, for whatever reason, with all the news and things like that, we're able to see price retrade lower and then find some support to then take it back higher. So it may be a week where it looks a little bit rough in the sense of we'll have basically like how the what was it, the daily was right here, right? Maybe we'll have a week like that where the week begins trading lower, but then it finds support and it snaps back higher, trades above where it opened at, but then maybe at the close closes back, right, within that range a little bit. So what you'll have on that open, high, low close is you'll have an open with a low that's really far from it, right? And then you'll have a high that's really not that far from the open, but very far from the low. And then you'll have a close that's relatively close to the open and a high. All right. And so that's a scenario that I'm looking to play out. And then pretty much that same concept, like I said, using S&P as basically like my gauge for what I'm expecting going into next week, because I don't have nearly as much information as far as the Dow. There's a lot of choppiness and things like that. So again, though, with a lot of these lows, not really, in my opinion, being protected, I could even go as far as this, right? Take from the low of the week and see these potential areas that price may want to trade through next week. Just considering that there are a lot of people with stop losses riding along these areas, right? Now, if anybody has theirs here, obviously first we have to break that low, of course, right? But so what I want to do is just make sure I got both of those levels or both of these quote unquote trend lines marked up. We've already, in a sense, breached the top one, as you can see, but then all that did was just created this lower one, and now we kind of have like a channel, because if you also pay attention to the bodies of the candles. So we, right, trade above, we trade lower, but we get one candle lower and we close right back above. Right. Then we get this candle kind of tests it. This candle tests it. This candle tests it. This candle closes inside. And then, right, we tap that volume imbalance. So definitely want to be watching these, I guess I call them liquidity lines, right? But technically you can call them a trend line. That's what the tool is called. But I would like to see price show a willingness to kind of trade below these, entice a lot of selling, even though prices will be trading lower, so there will be potential for profit. But I want to see them definitely reprice lower and then potentially find some support to rally back up. And again, I'm thinking that the Dow Jones may want to make a new all-time high. We'll see how that goes, but currently all-time high is up here just over 37,000. Currently we're sitting at 34,000, so that's a bit of a stretch to be thinking about right now. Maybe in the next couple of weeks or so, we'll have a little bit more information to see if something like that is probable short term, or if it's still something that's a little bit, out of the reach of what I like to do as a day trader, which is try to find the bulk of the weekly range, if you will, and capture most of that by taking most of each daily range that I can identify something high probability within. But with that all being said, thank you all for tapping in. Just wanted to, like I said, keep consistent with providing a review and an outlook for myself so that I can go back and reflect on all of this and really just see the things that I poured into this skill set to become the monster that I plan on becoming. So I'll talk to you guys in the next one. Peace.